If we assume that there is still a reopening momentum left in China, I think that's fair to assume over the course of, say, February, March, and April, then we should expect this to spill over to continued relative underperformance of India. If we look at the Chinese reopening right now, I would say that it's fair to say that China is open for business. We talked about that last week as well, but we get confirmation in data from surrounding countries that China is actually open. This week, we received data from the Japanese industrial production showing a rebound relative to expectations. And I think we can link that to the Chinese reopening to a large extent, since Japan is exporting a whole lot of goods to China. We also have clear links to the rebound that we see right now in Germany and in German equities as a consequence of this Chinese reopening. But one country is suffering as a consequence of this reopening, and that is India. India has been on top of the discussions, both among the elite in Davos at the World Economic Forum, but also among top investors across the globe throughout the past 12 to 18 months. India is one of the few countries that has performed throughout 2022, despite the ongoing malice across equity and bond markets in the West. And I think the reason was that India was on the receiving end of a lot of investment flows due to the Chinese perma-lockdown. Now that China is open again, we see a squeeze in the long positioning in Indian stocks. And we've seen a further sell-off this week alongside a couple of very interesting stories. But let's look at the fundamentals around the Indian equity case before we move to these stories. First of all, if we look at Indian equities, it's been a clear winner as a consequence of a lack of manufacturing coming out of China due to the lockdown. India has mostly been able to attract what I call services flow throughout the course of the 2010s and the 2020s. But through the pandemic, they started attracting manufacturing flows as well, as China was not open for business. India lacks relative to China when it comes to infrastructure. And I think that is the reason why global investors have not invested in the Indian manufacturing supply chain. First of all, most of the Indian population lives far from the shores, which is an issue from a transportation perspective. And it's the exact opposite of what we see in China, where the population lives along the coastline, making it much easier to manufacture stuff and sail it via sea to the West. But as China was in a permanent lockdown for a couple of years, India started attracting these manufacturing flows despite this lack of infrastructure, and it gave a boost to Indian equity markets. Secondly, if we look at the service sector, India has been clearly on the receiving end of investment inflows into everything tech-related, and it's been pretty clear over the past 6 months that the tech sector in the US is suffering. And I think it's fair to say that India is now suffering with the time lag as a consequence of the layoffs that we see in US tech in particular. We've struggled in the West to find the right competencies, to find the right skilled labor to do tech jobs or to take on tech jobs throughout the pandemic. But now that layoffs come in week after week in the tech sector in the US, but also in parts of Europe, it is now again, on a relative basis, easier to attract the right talent in the West. And I think that's an issue for the Indian service sector. And we see that in the equity performance in India through the first weeks of the year here. So it is a very interesting story that is playing out right now, that when China is reopening, India suffers.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.